Good morning, SMF MMTs. This is your monthly job report, and I can tell you right now that Dow Jones is gapping down 150 handles on that left opening pre-market gap down 17 handles on the S&P. You got a big, huge gap down. That unemployment number, as they've been pumping and dumping it, once again, the truth will come out. The SMF was calculating a horrible number because in our database system it said that everything that people were putting opinions out were wrong. And when the public likes to buy into that crap, they deserve what they get, as far as I'm concerned. The Nasdaq futures are down 25 handles. And the bull is going to come back and take a crappy ass number, and they're going to say that that's a great thing. It's not. So what they'll do is they'll take the April number, then they'll take the May number, and then they'll try to cost average it out between it, and then they'll say, well, this is where we're at. Oh, and it's not all so bad. Bull. It's not working for them in their little manipulative stimulant ways. On the screen here, I've got the Google down 3.41, so this is the gap down so far in individual names as far as the gap open down on the Nasdaq comp. On the gap open up on the Nasdaq comp, you have a couple of little gap ups outside of the number, but here you do have the SQQ bull gapping up. Once again, the unemployment number stinks, and the thing about it is that markets have to factor that in from their irrational exuberance. Irrational exuberant analysis has no merit or foundation or belief to believe. There is no accuracy in exuberance. It's irrational. And irrational exuberance equals irrational exuberant analysis that these people put out on Wall Street on a daily compounded basis, just throwing stuff out there. And guess what? Then here comes yabba dabba doos. And what do? They make decisions on what they read and what they get in their inbox. It'll teach them a lesson. It'll teach the public a lesson. And the lesson that needs to be learned is the most common thing is to learn how to do and learn what this is about. Because everybody that's been pumping this stuff for the last 2 weeks, every one of those economists, every one of those people on CNBC, every one of them are wrong. And what will happen in the actual trading day today is that we'll come down, we'll hit lower levels where markets are made. There'll be transactions off of the bottom. It will be weak, so whatever rolls up is going to roll over. So when it comes to transacting a long trade with a 369, you're probably not going to get much more than that. It is a Friday. There is a trade management and a gimmick that goes along with these numbers. As you hear the commentators on your pundit TVs, oh, it's a good thing. Oh, it's a good thing. I don't think it's a good thing. So it is not a good number. It's at 9.1%, which I believe is a lie, and I think you're probably more in the area of around 9.6 or 9.8%, closer to the 10% unemployment handle when you net it out around the USA. Because our databases show that 9.1%, as they report, is not accurate. And once again, welcome to Wall Street, and welcome to the unemployment number, Jobs Friday. Gap open down is getting bigger. Overbought stocks with less people working, overbought exuberant indexes, as stockmarketfunding.com has every single live analysis. And I can tell you one thing, compare that with the rest of your, go to your inbox and then take a look at all the emails that people were pumping out to you, telling you what a glory picture it was. Well, guess what? That bull is getting caved, and the thing about it is that bear is getting some movement. So when it becomes between bear and bull, one of the trades that we'll like on the gap down, that Joy Global had a big move yesterday. That's going to be a trade off of the bottom. So you will hit the bottom on equities. However, the actual trade management would be that the length of that trade off of that left elbow gap down will go back up and hit that resistance and then roll over. The other thing is in the last final hour on a Friday, do people want to own equities or do people want to sell? Where is that bear and that bull sentiment ratio? Where will the VIX and the VXN fear indicators, if they're breaking out and setting up weekly breakouts, then equities continue to go lower, and that means that the transaction to the short side up at the highs are a great thing. That little ADRs, the little Chinese rat stock, Soho, Sina, Baidu, all of them have been having their actual price action volatility trades. They will come down off of the highs. They'll come up off of the lows. They'll come up to the highs on that Sina. It's got a good another reversal coming. The lows are 104 back up to the 125 handle, and it's going to come from the 125, 126 handle. We're going to come back down on those. Some of the other things that we'll be looking at today is exactly where the left side of the reversal side of the markets, and are we in a long left so nothing goes straight down, but when you come up off of the bottom, but you roll right back to the left and you roll over, which would equal a short sell. And how do I sell short? Well, you hit the sell short button at resistance. When it closes below that half bar and continues to go down, the money prints in your wallet.